All right, guys, welcome to this video. This one's going to be quite a long video as I'm going to be showing you my entire process as to how I find levels on Bitcoin, how I determine to take trades, and how I plot everything out from literally the beginning to the end and my entire thought processes and the steps leading into taking trades. So, yeah, this video is going to be quite long. It's going to be no cuts. It's going to be just here in the moment. For those of you who want to watch it, great. For those of you who don't, you can skip now because this video is going to be the entire process of how I'm currently doing things. The only minus would be the fact I'm not going to speak about order flow, okay? In terms of actually looking at the order flow. That would be like another video as that can get really complex itself. But I'm going to be giving the rough structures and specifically I'm charting Bitcoin, okay? So that's what's happening in today's video. If you want to watch this, then keep your eyes open because I'm gonna get it all done today. So right off the bat, I always start in the monthly timeframes because the monthly timeframes give you the overarching look at where price is heading on the macro landscape because price doesn't lie when you zoom out. Okay, so what's it telling us? For the past 1, 2, 3, 4, 5, nearly 5 months, it's about to flip over in the next 2 hours. We've gone down about, well, let's go right from the bottom to the top. Gone down about 50% from 126 to $64,000. Okay. And now we're going to get into what zones we're in and the supports and everything. But just looking at it from where we are, we've retraced quite a lot. And it's safe to say we're in this phase as it seems, right? So you can see that right there. Now, what I like to do on this time frame is get out a horizontal ray tool. So that's this one right over here. Snap on a magnet tool at the same time. Now find levels that are open and closes that haven't been tapped yet. For example, this is one right down here. So you'd go here, you would change that to monthly. The same thing can be done right at the top here, and you would change that to monthly. So these are levels where price, let me just load that up. These are levels where prices have opened and closed on the monthly timeframes. Okay? And there's one down here, but I'm not going to mark that out because of the significance. We'll mark that out when we get down there. Okay, if we do, I don't expect it to be going to 26, but if we get there, then so be it. Now, the next thing is you go to the weekly. So month, week, and day are your main time frames you're looking at. So we can immediately see that we've got one coming at right here, $93,000. And then we've got one coming here at $54,000. We've actually got a few coming in here, and we can refine that even further with volume, okay? So there's one down here at $54,000. There's also one down here coming in at, what's that, $41,000 there. So we'll leave that. I mean, it's a bit out of reach right now, but we'll leave it. All right, so now that that's in place, we can zoom into the daily time frame. So if we run out to the daily, we do have levels that are, you can see here, but I'm not going to be able to highlighting them, only levels of significance that are more local to us. Those are just too far away. So if we go just locally, what we're seeing here, we can immediately see pictures getting painted pretty clearly. And I'll show you the importance of why these are important. Let's just first of all, let's batch these ones up. So I think we did two monthlies and 2 weeklies and 3 weeklies, sorry. So we'll go monthly levels. I know the usual YouTube videos are very hypey, very crazy, but today's going to be very chill. And it's probably going to get no views, but I just want to put my processes out there anyway. So that's weekly, that's your monthly. All right. So if we go to the day, we can see that, you know, you have levels here, like here, 1, 2, 3, 4. Nah, that doesn't count because that's not touched. 5, which has been washed through. I think we're actually doing a back test of it. And I'll show you the significance of these levels. Just 1 second. So we had a monthly, also daily right there, coming at the lows. And by the way, these are zones. They're not exact levels. So you never want to look at a level and think it has to hit this exact level. That's not how it works. All right, let's move to the 4-hour chart so we can see how price moved when it hit the level. So we formed a daily level at this point here, right? So open and close was somewhere around here. What happened since then was price found a bottom and it pushed up, okay? We found the resistance from the 3 drives top and we fell. When we fell, we came into the daily, chopped around and pushed up about 4%, 3%, okay? So these are levels of support. The same can be said down here. Another thing, once the level is broken, it is usually classed as resistance. So you can see support was found, broken down, resistance. Come into the other support. Resistance, break above, support, break down, resistance, break down, back to level. Now, the more times the level's been tapped, the more weak it gets. So the more times we trade here and keep tapping 1, 2, 3, the reason it gets weaker is because there's more liquidity buildup beneath these levels, and there's a high chance it breaks through, okay? And usually when you keep tapping a level many times, it just doesn't, it means that it's not very good, okay? It's just, I mean, liquidity is one reason. Also the fact that why is it from a price action perspective, why would it be bouncing like this if it's strong? It wouldn't be, because number one, liquidity. Number two, market structure. You want to be seeing, instead of the horizontal bands, you want to be seeing like that instead, right? So you can already paint the picture as to why that would be weaker. So we can take that away because we don't need that. And what we can chuck on now would be, so that daily was hit. We actually don't have any dailies that are in scope right now, besides this one right here, which is a bit concerning because of the fact, if we go to the hourly chart, we can see that we're testing it right now. Remember how I said from support, things get turned into resistance. So if you slash through a level, well, then it turns into resistance. So unless we climb above it and flip it, but you can even see price action on the 12-minute chart, it's forming a triangle right beneath this level exactly. Now, it very well could break up, and these are more low-level probability types of trades since this level isn't even, let's see how strong it is. It's not that strong because it's already a level that's already been touched many times, so that's not very valid. This one, for example, wasn't touched. It was here once and it was ready to go. This level as a level has been tapped many times, so it's not that great. Now, once you've marked out your levels, actually we'll chuck a daily up here because that's very important. Like so. And we'll do the same up here because that's going to be a bit of value up there. Just like that. And by the way, at the end of this video, I will be giving you the trades, the levels I'm looking at in more depth than my last video because we have some time here today for those who actually want to wait around and watch this. Once I've marked that out, we have a clear picture of what we're looking at. Now, you can add liquidity, you can add all those metrics, all that sort of stuff, but let's just keep it purely on the canvas where we are right now. Okay, now once that's done, I want to know where is volume residing in this entire range going up and in the entire range going down. Very simply, you grab the fixed range tool. And you know what? All this is simple. It just requires you to actually be patient and not overtrade. And if you do that, you can compound over the time and years. Okay, right off the bat, what can we tell? What can we see? Number one, we have some volume up here, which goes in quite close to this level here. So this would be called confluence, okay? Because you have multiple tools coinciding in one place, which is a level of confluence. It's a convergence, right? So 1 and 2. So 1 could put a volume node here if I have the volume node tool set. Probably not. Either way, what we can do. Sorry guys, it's pretty late here. What we can do is we can chuck on a little band that looks like such, and this can be colored red. You can customize your charts how you want to. I'm a big customizer sort of guy, so I really do enjoy customizing charts. But yeah, you can basically put that there. And for this one, we'll take it as red. This is a level of volume. Another level of volume is this one coming right over here. This band over here, which ties nicely with this daily, also spans up to the weekly. So you can put that as a zone here, starting from approximately 88 to 93. And then we also have a bit of volume coming in at this point here, which ties in nicely with the value area high, value area low, also with the low wick there. So you'd extend that up there. So what are these? These are volume regions, okay? So we'll add that together. Volume regions upside. So this is if price moves up. This is the levels of volume you'd be looking for. Let's do the same thing with the downside on price. Let's clean the chart. What's relevant? This range is very relevant. And also this flush up's very relevant. So you can move the fixed tool from here. And there is no exact spot needs to be pulled from. It just doesn't matter. It's just where's the point of relevance, right? The point of relevance for us specifically is this zone here because that's where price is. Okay, that's where price is. So right off the bat, we can see that price bottomed from this volume perspective. We had a large volume node here, and it bounced from there, and now we're falling back down again. But at least it bounced. It shows you this validity to these tools. So right off the bat, we can see that we've got one coming in down here. Take this over to green, and we'll see if there's also confluence coming in. Okay. We do have a cluster of volume coming in this line, but I'm not going to mark that out necessarily because it's already been tapped, but there is one down here, which I'm going to be, you know what though, I'm not going to tab it because I'm going to highlight something else that we got down there. And we also have a level of volume coming in right at this weekly over here. So that's a level of confluence we can see there too. Let's go volume region downside. Okay. Now, once I've done that, what I want to see for is Fibonacci levels because they have a very good hit rate in the market. So we can mark the bottom to the top. What are we seeing? The important ones are really the 618. So the 618 Fibonacci is pointing us to at approximately 57,800. Okay. Now, I'm not going to bother doing the upside because I think we have another low coming in, which means that it's going to be somewhere around here, which would tie nicely with this level here, which is a liquidity region. Let me just move this one. So let's say we bottom around, actually, let's use this. Let's say we bottom at this Fibonacci, $57,000. Well, that puts the expectation zone as a level of resistance right here. What is this zone? Support, support, resistance. Okay. Also, let's have a look at the levels. Nothing crazy on the daily and monthly. That's okay. What do we have in the volume? Nothing, not much volume actually, but it's not a level of interest because of the fact that it is a level of liquidity and support and resistance. So it's a level to be looking at, okay? If that was to take place. But that's why I said I'm not going to forecast yet because we don't know where the low is going to be. So right off the bat, we can see we've got the Fibonacci. We can see the daily, monthly, weekly upside levels, and then we'll do the downside. So this gives a picture of where is the support residing. Now, when we zoom in on the daily, we can see that we have 59, 57, 54, and then $50,000. So within this band is where you'd be looking to take very large spot positions, in fact, because of also the momentum. And if you zoom out on the weekly, even the 2 week, we are probably going to find a point where it looks something akin to this. And it would look something like this. The thing is, you want to be in before it has the dot because that already pumped up and that move up is already a significant 28% move, okay? So I suspect this will occur at around this point here. We will expect a solid flush up to the upside. But again, level to level trading is how I do this thing. If we go back 3 day, 2 day, daily. So it's very clear to me that we've got levels to the downside that want to be hit. And to keep it very, very strong, I would say there's a solid chance we have a solid bounce coming in directly at this point right here. The reason being is the fact that we have a swing low right there next to it. So it would be a liquidity grab and a good scalp trade, which would be right over here. So this is a good spot to take a scalp trade. So you can mark that one out. And then the swing trade would be 54, 51, and 40. We can ignore that for now. I don't expect price to be going that low as of right now. Okay, so that is what we know in terms of the expectations for the more macro timeframes. Okay, so what we can do is we can just take those out and not view them. To the upside, we're going to leave that for now. And what we can do is we can zoom in on the more local timeframes. Now, just to preface, when entering trades on those bigger timeframes, they're marked out, but then you zoom in on the smaller timeframes. So when we get to, let's say, this level, I then zoom in on the charts and have a look at how price action is panning out. So let's give you an example of what would happen within this region. So right off the bat, you can architect this pretty easily. we can put a volume profile. Okay, so what we have is price action. And at the point in time, let's say you were around here, because this was the level we were talking about in the charts. Now, at this level, we knew that we had the value area low here, we had the value area high, and the POC. And this was a few days ago, but I specifically didn't take any trade here in terms of a long because of the fact that we were dancing right in the POC. And you never want to be taking a position directly at that if you're trading in a range. Now, I know it dropped a lot, but you still don't want to be doing that. It's bad practice. Now, if it was a different perspective where it's like, let's say the volume's residing, let's say it's different where it's like you're taking a fixed range pull from here, and then you have a big level of volume coming in here and here, and then price gets there, then that's different. You can take that trade because it's the first time that level's being tapped. Okay, this level of POC has been tapped multiple times, so it was not a very good probabilistic trade for me to take. That being said, it did work out pretty well for those who did take it. So right off the bat, what we can do going forward is plotting out this entire range and seeing where is volume residing. We can see that we have 65 as a value area low. We've got 67 and $70,000 as our levels of resistance. So resistance, support, midpoint, meaning no trades to be taken here. I mean, if you really want to, go for it, but I personally just don't like the probabilistic odds of doing that. So let's just have a look at how this has panned out. This price deviation here resulted in a push up very fast to the top, so short squeeze. Then we've fallen down very quickly amongst the fears of war, but also a bit of price action theories taking place. So the value area low held and price pushed up for a bit, and then it tanked. And now we're bottoming at this tiny little fair value gap. You can point down right over here. Let me just zoom that here. This little zone right there. This could probably push us up to this zone here. The reason being is because let's see where the volume is residing here. 1 to 2 there, and then we've got this little pull here. And then we've got a pull up here, which we can see coming in there. So as I was talking about confluence, one would say that we have a gap in this zone. We've got the value area low, and we've got the VWAP coming in. So this level will be a good level to look for a level of resistance as we approach that, because this isn't looking like very strong price action. I would like to see lower get hit. That being said, does the market want to do what I want it to do? It doesn't have to. And you can still make money that way. It just means you're probably taking less trades. If anything, when you take trades when you're comfortable, you're going to make more money. And that's one thing I've noticed when I switch my style to just taking when I'm comfortable and not freaking out. When you have this like FOMO that you have to win the trade, it really stuffs you up. Like it really stuffs your mental up. And then you have FOMOs of like AI is taking everything and I have to make it right now. Well, then good luck. You're going to lose everything you have. So capital preservation is very important. So right off the bat, we can see that that's the case, that I would not be looking for a position right now in this current time. For essentially marking these levels out, you just mark out the dailies and then you mark out levels of confluence. So it's really just about finding it. It's like gold digging. So you're trying to find, okay, where's levels of support here? Down at this end, we've got this little level here. Coming up here, we can see that we've got a few gaps coming in here and here. So that these are going to be levels of turning points. So this one up here is going to be a level of turning point. And then it's like, okay, what else resides near there? Okay, well, we can chuck on a Fibonacci. That ties in very nicely with the upper supply zone of that Fibonacci level. If we were to plot that as a 50-50 ratio, you would see that 50 percentile and then upper tile here. So that's very valid. And then what you're doing is you're really just going to be chucking on a bunch of metrics. So you can chuck on some indicators to give you some extra information. So you're just not going to be taking, like for example, you're not going to be taking a short when you're seeing this. Okay? That's like a rule. There's no shorts when you're seeing this sort of behavior coming into pivotal lows. Same thing when you're seeing, let's just go to the fixed range. The same thing can be said when you're seeing this. Why would you be looking to take a long when you're seeing price come into the 80th percentile, which is the value high, as we're starting to form this rounded pattern? And the same things here. You don't be taking trades here because of the fact that it's rolling over. And if you were to take a trade, it would have to be a short because of where we are. So it's all about positioning and understand where the market moves. Okay, if you had to take a trade right now, what would it be? It would have to be a long trade. That being said, I don't find the probabilities are awesome for this trade. And I feel like it could do one of these little things. Even if it doesn't, me not taking a trade doesn't mean it just means I didn't lose on that trade. And it means even if it did work, well then, okay, but I don't care. See, the thing is that doesn't matter. It's the trades that you take that you feel comfortable with and you feel are going to have a high probability. And that's the key. So like you could just view this entire range as like a swing, swing up, down, up, down, up, down, up, down, up. Very closely tied here, you can see. But yeah, it still chops you out. It still does a lot of damage to you. And that's why order flow is very important. So when you get to certain levels, you have to have order flow. So then you can refine your stop losses. So when you take the entries like these ones, all right, where's your stop loss going to be? Why are you going to enter? That's very important because it gives you safety in case you get liquidated. So let's take this example for a bit here, okay? So this low coming in right over here, which was the daily. We all saw this. There was a 6718. Is it 7 something? 7 something. Let's chuck it on here. 786. That's it. Came in very nicely with the 786. You can see here. Also in the backdrop of the starting to roll over there. So what you could do is you could zoom in on the hourly chart to get a better picture of what we're seeing here. So immediately off the bat, on the 30 minute, we'll do that even more. We could see we were tampering with this level. Tap, 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 tap. What does this do? It builds liquidity to the downside and spiking down. Now I did get in this trade, I did make profit, but it was very close. It was very close to getting liquidated because of the fact that we had this spike down and I was getting ready for it to rocket up. But the thing is, you have to be ready for these little liquidity grabs. That's what these are called. Essentially taking out the wick lows and then reversing back up to take out everyone. It's a bit of a dubious science, but it tends to be the case in the way market moves. But yeah, one would say that you had this formation forming. And in terms of like the last straw in a line for this trade, yeah, I mean, you really don't want to be deviating too far away from these levels. So your stop loss would have to be within reach of these. Okay, and then the same thing can be said with the upper band up here. We also had a daily coming in. Let me just zoom that in for you. We also had a daily right over there. That tightened pretty nicely. So you had a daily, you had a value high of this range. Same thing. You're seeing the rollover start to come in. And at that point, it was here. So it wasn't the rollover yet, but it was starting to crest slightly. Just the gradient was starting to slow down, okay? Now this tool is free and it's really a biasing tool. You're not going to be taking trades off this. You're using order flow to take trades, but it's a tool to use yourself to bias. So really that's pretty much the process. It's marking out everything on a macro level, then zooming it in on the lower time frames to get a picture. And then there's nothing else really to it. It's just that, and then checking order flow, and then synthesizing. How do I say this? Synthesizing the information with other influencers and creators that you follow and you think are valuable. Shout out to Astronomer on Twitter, on X. You can follow him. I think he's very good. But yeah, it comes from a little bit. It was like a sixth sense in the sense that you've seen so many patterns many times that you have a good eye for it. But you definitely have to be more than that. It's not just all about having an eye for it. There is definitely marking out things, understanding where things would pivot from and why they would do so. And that's that. So let's just look at this locally as what we can see. Just get it done very quickly. That's a swing low, so we'll change that to swing low. There we go. Okay, swing low, small fair value gap, volume, and then we can see that we're trying to paint a picture is essentially what we're trying to do. Dun, dun, dun. This would go very nice with this level as resistance, okay? So I'm already seeing that that's going to be a problem, and this one here is going to be a problem for the upside. And then to give a look on the volume, the Fibonacci, 2, 3. Yeah, that's what I'm looking at. Zoom out on the 30-minute, we can see what can we see? Well, if I had to take a trade, it'd have to be a long. That being said, why would I take a trade here? I'm not confident in this level, so I'm not going to do it. If I had to take a short, it'd be from up here. Like it'd start to get in to be a scalp short, and then I have another short up here. Those are my levels. So in this whole range, you don't take anything. In this range, you don't take anything. Like if it's not in those zones, you're just not taking a trade. That's as simple as it is, okay? So that's the process. The rest is literally just entering and getting in and getting out, and having the balls to actually press the buttons and press buy and sell. That's it. There's nothing really else to it. And then the order flow is like the main thing. And then repetitive cycling of seeing things is like one of the most important things, because it gives you a good intuitive basis on what to expect next. So if I were to sit here and say, what do I expect next coming out of this? I would say there's probably a high chance that we push a bit higher into this little region. And then I would say this is the make or break it zone to roll over, we're pushing higher. But in terms of if you're going to take a trade, it'd have to be up here or here. Could we roll over from here? Absolutely. But the confluence levels are low. So it's all about stacking the probabilities of why you'd want to take a trade. And if you can't build a compelling case, like think about filing an insurance complaint. You're basically trying to get a, let's just say, a very good case as to why it should reverse at a certain level. For example, this level right here. This level came in very nice. I was actually talking about this on the Moon Show, so you can watch that. This was publicly seen, like 10,000 people. This level was very nice because of a few things. These are confluence zones, as you can see here. And then we've got liquidity, liquidity, liquidity. And VWAP from the entire high. Fair value gap right there. You can see we've probably got a Fibonacci level coming in. Close enough. Yep, right there. So this was right here, was a level of interest, which was very, very shortable and very profitable if you did it, which was in total a 37% move down. So that's that. These levels will come up again, okay? I've seen it so many times. They will always reappear. In terms of where they are right now, well, unfortunately, they're lower. So if I had to pick my side, I'd be saying lower is what I expect overall, and then push up higher. Okay, so I know we still have a lot of liquidity up higher. It doesn't mean it has to happen though, because what I want and what the market wants is very, very different. Now, is there a case to bottom in this region? There's definitely a case for it. If we chuck in the 30-minute time frame, we can see that there's also, I mean, there's not much. There's nothing crazy down here. Let's see what volume is residing. Yeah, look, there isn't anything great down here. So really what you'd be relying on at this point would be just the swing play pattern of this low and the push up if it were to happen. Other than that, I would not be taking a trade there. Okay. So what does this mean? Well, it means I'm waiting right now and I'm happy to wait. If we don't take a trade, I'm not going to get a trade. That's fine. In the meantime, you can stack capital in real life by working or whatever you need to do and building the compounding loop slowly. Okay. Because when you catch a good runner, it definitely adds a cash buffer and definitely compounds pretty quick. So yeah, that's the current situation and how I do things. And then I synthesize it with other influences and look at that. And I look at my entries with other individuals and then order flow. That's it. It's not rocket science, okay? All right, that's that, guys. I hope you enjoyed this video. If you want to see more of these, let me know. For now, catch you later.